To another podcast here, and we have a good friend of mine, AJ Brown from Trading Trader. Been doing it for such a long time. AJ, thanks for coming here. It's always nice to see you again. It's been such a
Yeah.
while, and what have you been up to? What's been going on? How you been?
I'm I mean, living my best life, navigating what's happening in the markets right now, just moving forward. That's what we like to do, look to the future.
Good, 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 good. So, what's been going on in your trading community? What have you been working on with your traders and stuff like that?
I mean, right now it's earnings season, and I would almost argue this is one of the quintessential earnings seasons. We've gotten to a point, Fausto. It looks like that the Fed finally has figured out that balance point, right?
Uh
Where
huh.
they're discussing employment now, and they've got that dual mandate that they're always at arms with, but they've been working on inflation for so long. It finally, when they get to this balance point, now I think investors turn their eyes to what I feel like they should be looking at, which is how are the companies doing that are actually making this stock market work?
Yeah, what's nice about earnings, they come up, every quarter, and I always tell everyone the company is always going out of business because every quarter, and like, why is that? I'm like, well, because if they don't meet their numbers, they're going to get crushed, and you can see a lot of
Right.
stock. But yeah, regarding about the Fed rate, I mean, I'm just hearing they still don't know if they're going to continue to lower those rates and stuff like
Sure.
that, especially going into a presidential election. They're not going to say anything for at
No.
least after another week, so nothing's going to really go on.
But I like it. I like it when I look back at those Fed meetings, those meeting minutes, and I see that they're arguing instead of all unanimous. That tells me that I think that they're like now at a balance point when you got differing opinions that actually mean something. If they drop it a quarter point or another half point for the rest of this year, it seems like they're more at this point where, okay, we've got things in balance. And so we don't have to focus on them as much.
Yeah. So what do you think? Are they going to lower them, or are they going to keep them
I
steady?
think
What do you think?
I'm believing that they're going to go another quarter point for the November and December, and then maybe keep it steady for at least the first quarter of 2025. At least, I mean, that's what the market looks like they've already priced in, right?
Well, you know what the problem I have with the market is that you get you eventually get locked in,
Yeah,
like these companies doing great. You know what I mean? Like, and with the inflation, I always talk about the inflation. This is the problem I always find out because I used to work, well, at younger ages, I used to work in restaurants and stuff like that.
sure.
You could always go up, you can't go down. Like they'll
No,
always raise their price. So what ends up happening if inflation goes down, if food costs go down, everything else, you think a restaurant's gonna lower their prices? So, I mean, they're gonna want to make the money. You're already baked in. You're used to that's what a burger costs. I remember paying for a hamburger here in New York. It was like $10. Now they're $25. You know what I mean? You think they're gonna lower it back to 15? I don't think so if the inflation comes down. So that's why you'll see these stocks are still doing great and these companies doing great. So there's got to be some type of a fine balance there. And even with the interest rates, but I think the market's still gonna probably look higher for that one simple reason.
yeah.
What are your thoughts?
No, absolutely. I think things don't go back, and if they do go back, that there's a whole nother set of that's a trap itself. So, you want things moving forward, you want things growing, but I think that just some people focus on these numbers and yeah, to each his own. I just look day to day, right? I plan
That's
out
it.
what I'm doing. I look at what's happened and then I plan the next day and then I just trade the signals as they come.
That's exactly how I look at it too. So AJ, so listen, you've been doing this for a long time,
Right.
and I know we always met each other time and time again. I know I learned a lot from you. You learned a lot of my style. We just have a little bit of a
Yeah.
style, but basically 70% we trade the same psychology stuff. What got you into the education business? Because I get this question asked all the time. If you're such a great trader, why do you teach? So
Well, I got I so just to give you a little bit of history, I started doing this in 1997 for my own personal reasons, and I started going back then we didn't have so much. I mean, there was a little bit of WebEx, but there wasn't much of this online presence. So you wound up going to like hotel conference rooms. You'd go
mhm,
in for like a 4-hour session on Saturday. The next thing you know, you bought all going back all day Sunday, and then at the end of all day Sunday, next thing you know, you're on a plane for a 3-day intensive, like some sort of intensive somewhere. And so I was doing a bunch of those. I was working in Silicon Valley and I was living with a couple of guys, so my costs were low. So this was like a whole nother college education for me because I already had a whole bunch of folks. In 1997, there was this whole thing opening up in Southeast Asia. There was
Right.
Malaysia was on fire. The dot-com boom was just starting to gain
Take off.
yeah, and I was missing I felt like the financial planner that was doing my money was giving me, not taking advantage of all these things I was seeing other people jump in on. So I wanted to take control. But I got to tell you, I went to college, got some engineering degrees back in the early 90s, late 80s. And I gotta say that, the amount I spent on hotel conferences that year, and then that was about 27K, and back then that was some money. And then I
Wow.
wound up giving 85K back to the market, trying to follow what these gurus were telling me. I basically bought a whole nother college education. But the good thing is I wasn't in a place now where I got, multiple houses and a family to support. I was living with guys working at a dot com, I was working at Hewlett Packard. So I feel like that was the best time for me to learn in my late 20s, right?
Right. Right. That's how I started. I mean, we're almost like the same age then, right? How
Yeah,
old are you? I hate to don't ask a
51.
woman her age, but a man, you can always ask because
I'm
you still look great.
51. I'm 51 and I've got a toddler.
Oh, there you go. So I'm
Yeah,
53, so I'm not far. I'm a toddler. I got three mini adults, I would call them.
there you go. I mean, I figure I'm raising her in time for her to be able to change my diapers, right? I changed her
Oh my
diapers for the
god.
first few
Don't even say
years.
that. Talk about diapers. Do you know that in Japan, they said they are may have more diapers,
For
depends,
elderly.
other than for the young ones?
I mean, Japan's got a really aging, society there. They're gonna be in trouble pretty soon. A lot of Europe is like that too, man.
Yeah. It's a tough situation. But let's not talk about that because I don't want to think about that right now. What I want to think about is this, you know, being so well known in the online community, what have you found like that helped build and engage the audience that you started, from being back in the late 90s till today? For being around, you've seen what had happened with the market. The dot coms, the financial crisis.
There was
What
the
helped you?
energy boom.
Yeah,
Remember
yeah,
the
that whole
energy
energy, like
boom right
keeping more
before the
people, they'll lose
dot-com
confidence.
crisis?
Yeah,
Then quantitative easing, quantitative tightening, all that shenanigans in the
yep.
2010s.
Oh
Yeah.
my God, who could forget that? So how do you see how that worked out with all the traders, like from what you learned from now until today?
It's funny that you say that because, my big focus, Fausto, has always been options and being able to trade when the market goes up, trade when the market goes down, trade when the market goes sideways. Because you can combine option strategies and pretty much whatever pattern you can identify. And I'm not just talking about patterns in price, but patterns in volatility or even just patterns in the clock. Like we do a lot of trades going with options in the fact that they have an expiration date. So all those different patterns, if you can pick up on a pattern, you can get an option strategy to work for you. But that doesn't matter, right? There's an overall sentiment, even in people who don't trade the markets, right? There's always people, especially on the talking heads on TV, whether they be in politics or in news, that are always pointing at the Dow, always pointing at the S&P 500. And when those things go down, no matter what, I see people lose interest in the markets. They start like, you know, uh, grabbing for whatever they can and like burying it in their backyard, even if they didn't have anything to begin with. So though I can show you, just like in that movie, The Big Short, you can
Uh-huh.
show people how they can make money when the market goes down. It doesn't matter. There's an overall sentiment. I don't know if you see this too, but I'll lose people off my rolls every time there's a downturn. So, I think it's just an overall, emotion that people get when they start to hear their neighbors talking about their 401ks going down.
That's actually one of my favorite books and movies. I tell everybody, you got to watch it like two,
You
three
got to
times.
check it out.
Yeah, it's just a great, especially being in this industry. It's like, listen, think about these dramas, these love stories, all those other movies. You got to watch that movie. This is your job. You really want to learn about trading. that
Mhm.
just shows you how the game is being played.
Yep.
And it was perfectly done. Plus, see, every actor that you probably like, it's in there too, which is awesome. They played it great. But what a great, great movie when it came down to it. And there's a
I
lot of
like
good movies on that that actually educate you a little bit more. There's only so much we can kind of explain. But getting back to your option strategy,
Yeah.
how did you get into it? Because like everybody's like, they'll like I always try to tell everybody, learn how to trade the stock first.
Yeah.
And then when you're a good stock trader, then you'll know how the option trades and then or trade a different industry or listen to it. But how did you get into that
That's a great
option?
question. The scoop is I tried a lot of different things. I tried trading foreign exchange currencies in the middle of the night. I
Right.
tried stocks, I tried commodities, and it was my personal what I always tell folks, Fausto, is look at your own personal situation and not necessarily just your dream situation of where you want to be once you've attained a certain amount of clout or whatever, but where are you right now? So I was working 9 to 5 at Hewlett Packard in one of those middle management roles. So they wanted me there all the time. So I had to learn how to trade patterns and end of day, right? Because I
Right.
wasn't going to be able to trade during the trading session. I wanted to. I trade during professional hours. So I used to turn my monitor. We lived in Cube City in the Bay Area. And so I would actually, everybody had their monitor towards the back of their cube. I turned it so that when people would walk down the aisles, they'd see the back of my monitor. And I
Right.
just put my headset on during professional hour, which in California was like 1 to 2. I'd
Right.
put my headset on. People would walk by and be like, "Hey, I'm on a call. I'm on a call." But I'd really be trading professional hour. But the scoop is I wanted to instead of getting the, timing signals, I wanted to be able to understand how to take advantage of whatever pattern. Because I found like stocks, you got to understand their direction and what they're doing, whether they're going up, down, or sideways. But if I could, instead of, worrying about the timing of it and get more into some of the more nuance, like could I take advantage of the rush of volatility going into an earnings play and then the crush right after? Or can I do some selling of options and have that clock run out and not be so, have to be there at the right time at the right place? So I was more into that so because that fit my lifestyle.
Right.
So that's why I've always been an end of day trader who focused on using these option tools. And yeah, there's complexity with options, but there's also flexibility. You can show me pretty much any pattern, and I can think up a couple of strategies that I could apply that would take advantage of the high points of that pattern.
But AJ, this is the issue I have with options, and is that there's just so many ways of trading an option, you
There
know?
is.
And there's so many people out there that trade option and they'll say like my way is the best way. See, when I trade stocks, it's just black and white. You know what I mean? It's just a bid, the offer. I just teach order flow. You
Yep.
follow order flow and that's it. And you keep
And
it
I've learned
simple.
a lot from you on that, by the way.
Yeah, I'm will. Thank you, and I enjoy doing that too. I am glad that you did because listen, I always tell them great traders never stop learning from other traders. You don't like to
That's
look at
right.
it. If you get an edge, you get an edge to it. But like what made you after learning from all these educators, like, and then you find your own style? Like, what, like, how is somebody? And like, listen, we're all different, right? But
Yeah.
how did somebody find a style that works for them? You know what I mean? Like how you found your style on options that worked out best for you. Because like you just said, you traded Forex, you traded stocks. I mean, like, how did you get into that one specifically? So everybody here knows what works for them.
Exactly. And again, a lot of people when they are dabbling. And I say that the first 4 years I got into trading, and I don't necessarily suggest that, I did something called trial and error, which is a great way to learn things. But I'll tell you, it's long and it's expensive. So if you can find a guru that you resonate with, right?
Right.
Guided discovery is the way to go. But for me personally, right? Um, I always tell folks, don't just get excited about, the dollars flashing, right? Right. That's one aspect is the amount of reward you can get from these strategies or these different trading styles. But don't let that woo you. You really have to take inventory on, what type of stuff, when do you have to be available to do this? How much assets do you need? What is the risk? And when you pick somebody who you're going to learn from, Do they focus on some pretty boring topics like position sizing and targets, right? Which it all plays into the whole discussion of money management. So, you're going to pick something that works with how you can trade, right? If you're somebody who happens to be available during the days, then you're going to be, in trading rooms, you're going to be doing these type of trades that, you're in, you're out, and that's great. But for me, I needed to be able to just sit at 10 p.m. at night, figure out what happened the night before, piece together different strategies. And you're right, Fausto. Options can really, people think that, the thing with options is to just leverage stock moves, right? But that's
Right.
just one, that's the tip of the iceberg, right? Options, not only can you combine them together into different strategies, like anything from covered call to condors to vertical spreads, calendar spreads, diagonal spreads. Not only can you combine them, but a lot of people don't realize that that expiration date and that strike price really changes the whole way that an option is priced, right? An
Right.
at the money near term option behaves totally different than a deep in the money far out in time option. So you've got all these variables, but you can actually architect. And this is what I get. Maybe it's the engineer in me, but this is what gets me like going is I can architect a whole strategy using different strike prices, different expiration dates, different combinations of options to really like encompass whatever's happening. And I'll just have the bots traded for me the next day, right? I'll look for some
Right.
simple signals. I use, but after taking some of your courses, some of the signals that trigger my bots is the amount of order flow into different types of assets where we can see, clear resistance based on order flow and not just, arbitrary lines that we've drawn. Great stuff.
So regarding about that, then how do you to explain to someone that they found the right educator? Because this is a lot of scrutiny that we get into this industry.
Mhm.
Everyone's like, "Oh, you're like everyone else," and I know you deal with these people all the time. You train a lot of people in the industry too, AJ.
Mhm.
Like, so how do you kind of tell someone to how do you separate yourself, or how to
Yeah.
find the right person, and who to stay away from the people that are not to learn from?
Well, I think, one of the first things you want to look for is somebody who has either been where you want to be, not just where you are now, but where you want to be, or, they're there now or they've been there. So you want somebody that you can, follow in their footsteps. That's a big part. But the other thing I always do is, are they teachers, right? Because I have hired so many folks over the years that, you know, I could see in their portfolio that they were doing what I want to be doing, but man, they could not convey the information to me. So there's an aspect of somebody who, y- not only knows what they know, but can convey it to another person. And then the last component is do you jive with them, right?
Mhm.
And I'll be
Exactly.
honest with you, Fausto. There are people who say, AJ's a little bit too brash when he's teaching his classes. I take the gloves off. If your trade setup,
I do too. I say, "Listen, I'm
if
pretty
if it
brash
sucks,
sometimes.
I'm
Let's
gonna
take maybe
say, hey
yours."
man, that
Yeah.
sucks, and it's not the market, it's you. So some people don't like that, and
Yep.
so you know. I know you do this and I do it as well. Just come and experience this. There's a trial involved and you taste test, right? Find out
Mhm.
who works for you. So it's the content and then it's the person making sure that they are experts in that content, making sure they can teach, and then making sure you jive with them. If all those planets align, that's your person and you don't even have to pay attention to any of the other stuff.
Yeah, that's basically a big misconception that people have, uh, trading today and finding the right person to get into it. That's why I love
Yeah.
doing these podcasts and having guys like you come on, is because, you kinda explain a little bit more of what to look for or not look for. Like I tell everyone, "Listen, I'm Italian, first generation, I had a really tough dad, and my dad always told me, 'I'm only tough on you because I love you.' You know what I mean? I want to see you fail." And kind of like put that on my students a little bit more, and sometimes a little brash, whatever, because we just don't want you to lose money. It's really
That's
comes
right.
down.
You
Just don't want you
worked
to lose.
hard to get that money, and the
Yeah.
last thing I want you to do is under my watch, throw it to the wind.
Yeah. Like, and listen, I tell everyone it's sometimes it's not for you, and that's okay.
Yeah.
That's okay. You don't got to make it work. You know what I mean? Like you tried it. How many times have you started a job, right? And like, think about it. Like, the day you took your first job, you still do that today? You know what I mean?
Nope.
Probably 99% of you will probably say no. You know what I mean? Unless whatever, it took a specific job, whatever it is. But like, listen, you learn from that. It takes a lot of them. I mean, you're going to be doing this for a career. You got to make money, and that's where it goes from there.
You got to fail
But
forward.
you should just keep going forward. But now, regarding about your trading that's going on right now, I know you have a
Mhm,
really cool style. I know you got some really nice indicators. I want to definitely share them with everyone. I know
mhm,
you're going to be giving it to everyone for free at the end of this presentation. Which, by the
mhm.
way, we're going to give his link. We're going to post it up there. We're going to show you what worked for him. I mean, AJ, like I said, 20 years. I mean, you've been doing it for. I've been doing it for over 30 years. If you've been doing this long, you're obviously doing something right.
Mhm.
But anything that being a good educator that helped you become a better educator. Like people always ask me, like anything that you've learned from your students that a mistake that you don't that you would advise that you see happen a lot of that you don't want to see happen to them. I mean, anything that you notice like a common mistake that people make.
Yeah, getting overextended into a particular trade is the number one things we see in our options because they're so freaking cheap, right? So there's a whole bunch of folks out there that will focus specifically on spreads, right? Vertical spreads and credit spreads. I've seen courses just on that, which, by the way, the credit spread is a great tool, but it's used in one application. And so that's what the number one things, if somebody paid me a nickel for every time somebody came up to me after I've done a presentation and said, "Hey, AJ, I bought this course. I was doing vertical spreads and the first 9 months was awesome. I was making, double digit returns every month on my money. Great, great, great. But on the 10th month, man, I don't know what happened, but uh, I did the same strategy, and not only did I lose all the money I made in the first 9 months, I also lost half of my portfolio and wound up having to mortgage my house a second time, and I lost my wife or
And
something
that
like that. I went off the deep end, but that's not uncommon that
no,
people
it's
do
not.
that.
I hear that. It is. I hear
And the
that
scoop
too.
is, the strategy worked, but something changed in the markets and you were
Is
applying
it
the
greed
same.
or is it just a bad strategy? Which is what I was going to lead to you. Like, what strategies are like the most strict, the most volatile, most dangerous versus the most conservative, or that
Well, that particular strategy, you need to watch out because that strategy quickly goes from profiting to loss. And so you have to assume when you're position sizing that the worst case scenario is you lose the whole investment, right? And so if that makes sense and you've pre-programmed into your algorithm that, the most exposure of my portfolio to one of these, trades would be 2%, then you don't want to invest more than 2% into a vertical spread. But I've seen people put half of their portfolio into a vertical spread trade, thinking that it was a sure deal. And then when it goes south on them, they've lost half their portfolio. So you really have to, and this is not options trading or AJ trading. Whatever trading you do, you really have to model out what the worst case scenario is. You think like one of these like generals goes into war saying, well, this is the best case. And so this is what we're going to do. No, he totally assesses what would happen if everything went wrong and then plans around that so that, he only can celebrate because he's already set himself up for all the losses. You got to understand what the worst case scenario is in the trade you're about to pull off and then prepare for it. Size your position accordingly, set price targets so that you can get into the trade so that it can only go north and not any farther south, right? And so that's what people needed to do. So it's a combination of number one, not matching the right option strategy with what the market's giving you at the moment. And it's number two, not doing the correct risk, sizing for your trade.
so because they're so cheap and the vertical spreads are like the most popular things. Yeah, because I hate that word. Like I use the word, which some people don't like it. It's sexist, but it looks sexy. I mean, like, oh,
Yeah,
it's how much money you can make on it. It's just a hot look. And obviously, that's the most risky of them all. I mean, and that's where I feel like I try to tell everybody, like, listen, if you can't afford to lose it, you shouldn't be trading. You know what I
true.
mean? Like, Yeah, and you don't want to like you can't hit home runs every day because you're going to strike out more. So the vertical spreads are obviously the most risky, which is pretty much probably what most people like to hear and stuff like. What is the not least sexy and the most conservative way of trading an option style?
I
Is there
mean,
another one?
I don't know if there's anything that's not so everything involves risk. But I like those ones that are absolutely boring. So I look for stocks that are not on anybody's radar. I just did an earnings play last week on 3M. I mean, who goes
Trick.
around talking about 3M except for you might hear about it mentioned on some of the, some of the financial channels, but you won't hear it in the mainstream media like you will an Nvidia or a Tesla or something like that.
Right,
It's absolutely boring. I mean, adhesives, right? Scotch freaking tape. That's
right.
that's what 3M is.
It actually did pretty
However,
well the other day, though. Believe it or not, last week it did a nice move.
not only that, the volatility. So I saw here's my scoop with earnings, right? I never know, number 1, whether the earnings are gonna be positive or negative, but number 2, more importantly, how are the investors that are interested in that particular stock going to react to those earnings? Because sometimes you get great earnings, but they're not good enough and investors dog it anyway, or
Right.
sometimes you get earnings that shows a loss, but investors say, "Well, that wasn't that much of a loss," and they give it a so you never know, for me, what direction things are gonna go, but one thing you do know is leading up to it, everybody who owns, whether they're short or long, they're gonna hedge their position, and what they do is they go and they buy options, right? They buy these, like, options that are gonna expire in 1, 2, maybe 3 weeks, and it causes those options to go up in price. And so
Okay.
what I like to do is I like to go in literally an hour before the close, whether the earnings are going to be after market or before market, the hour before the close. So right when professional hour starts, and I'll start selling that option, right? I'll sell that option to it when it's at the highest price because people, they're just worried. They use it as a hedge so that if the direction goes south or north, they are going to be safe with whatever their long position is. So I sell it to them when it's at a high, and then the next morning when the market opens, usually during that first amateur hour, that first hour of trading, I buy it back because as soon as the market opens and earnings is out and nobody's fearful anymore, they start selling those options back and the price drops. So I'm just like in that Trading Places movie. I'm selling it when people want it and they're willing to pay top dollar, and then
Well, they
I'm
have to close
buying.
out a position or whatever it is. They have to close.
That's it. They don't need it anymore. They're like, "Hey, this is a tax on my position, so I'm gonna sell."
Look at this. I made a clock, exactly what you said. I designed this about 30 years ago. Best times and worst times to trade. So you just said the same thing. The first hour,
Yep,
where the top move, and the last hour, so you know exactly where to trade. And my students love this because it's exactly we preach. It's the same thing like the stock market. Screw the middle of the day. I mean, you can still get some action in there, but the more probability was within that first hour and that last half hour, like you said, because they got to close out their positions.
that's
Which
right.
I don't know if you heard about it, but they said that the New York Stock Exchange is going to change the rules. They're going to want to. They're going to be opening up. I think they're going to be opening up almost to like 6 in the morning, or they're going to open up earlier. They're going to try to go 24 hours, which I think they're going to ruin
Well,
it.
and that's and I'll tell everybody, just anybody who's interested in options, one of the things that's kind of a thing, a thing we have to work around in options is the options market has been pretty solid being in the typical hours, right? So anything that happens after hours or pre-session, it affects us as soon as we're open, like, almost instantaneously. So
Right.
we could go to bed, all fat, dumb, and happy. The next morning, we could be like, if we didn't prepare the night before, we could be in some interesting situations with our options automatically adjusting at open. So it's something you gotta work around, but, you learn your style, you learn how to deal with these things, and life goes on, right? It's whatever fits your personal strategies, right? Your personal intentions.
Did you ever? You talk about boring stocks. Do you ever like just own the stock and just sell the option and
Oh,
just make it? I
that's
mean,
my go-to. My
that's what.
go-to. So when I'm not in earning season playing these overnight trades, I absolutely love either owning the stock or shorting the stock and then selling premium against it. In fact, I was showing people last night on a
Is it like a
swing.
guarantee making money?
I mean, it locks in your reward and it locks in your risk. It gives you a sense of confidence where you can, because you can use options and they are, they're a way to, I don't know if you've ever had this happen. We have it happen in options all the time where you set a stop loss order and then things are moving so fast that you don't get the price that you set for the stop loss, right? Because
Right.
remember the stop loss order, that dollar figure you put in is what sends the trade down to the trade floor. Then the trade has to go, right? It has to get completed. So it might get completed at a different price. And depending on the liquidity, like some of our options aren't that liquid, we could have a stop loss order at one price. And by the time the option trade actually goes through, it's at a much different price. But when you protect your trade, like if you have a long position, a stock position, and you protect it with a bought put, right?
Right.
That strike price, it still locks in your risk, right? But it locks it in differently. Instead of, a stop loss order will turn you into all cash. What this does is the put will increment at the same rate that your long position decrements. So you now have these two trades that balance each other out. And so I love those passive type of strategies. So if we sell premium and then go ahead and buy a protective option, collar the trade, we basically have now defined what's our max risk, what's our min loss, what's our min return, right? What's our max return? We know all those and we can go to bed fat, dumb, and happy and not have to worry about any gapping the next day.
So you
So
basically like an insurance policy, you would say.
that's exactly what I do. We were looking at a swing trade setup last night, and what we determined was instead of where we get in at the bottom and then you exit at the top when there's weakness, because we were watching as this symbol would swing and then it would swing again and it would swing again. So what we decided to do instead was we bought the stock. And then every time there was weakness, every time we hit some sort of level of resistance, we would collar this thing. And so basically, we would sell a call, a near term call. So that thing would give us some money and we would use those subsidies to buy a protective put. And what's
Well,
really nice.
why don't you show us? Could you show us?
Yeah, yeah,
That would
yeah,
even be better. I think everybody here would love to see that, what you're talking about.
yeah. I would love to. Let me pull up my, here it comes, my charting software. We were looking at a pattern, although we didn't like the option chain on this one, but I'm going to show you the pattern we were looking at. So this is Road. This is a company that is down in the southeast. They're taking advantage of the infrastructure bill. They're making all sorts of roads and all kinds of good stuff like that. And if I throw some of my free indicators on there, right? I have this one called the confirming indicator MACD. You know, nothing special except for I can just get some cool little arrows on here. Let me go ahead and make sure I turn it on. This is the Thinkorswim platform. We've got these indicators in a couple of different other platforms as well. So basically, every time we get our little bottom and we're getting our indication that we want to swing, great. We go long the stock. But then when we get to our top, when we determine weakness, basically what we're going to do is we're going to sell premium. So we're going to sell a near term option. We could pick the strike price, and that'll define for us, temporarily what our max reward will be. And it's a given, right? It's now something you can bank on. But then the other thing we do is we use all the proceeds from selling that call option to protect ourselves. So we'll use a 3 to 6 month out option at a lower strike price. And now that thing starts to appreciate as we get that pullback. So I'm still in my underlying symbol, but instead of exiting at the exit signal, I put this collar on, and this allows me to squeak out gains in the opposite direction. Now, when I get my next signal for the next swing up, I just remove the collar and this continues to profit as it was. I'm actually adjusting the position by adding and removing this collar instead of just exiting, and that lets me take advantage of that little move down with a put option that I subsidized by selling a call option. I know it sounds like a lot of word salad, but these little tiny adjustments let me eke out every last bit of profit from these little swing trade moves that keep swinging one after another.
Now, how does that look like on the actual trading platform? You look doing it on a chart, but let's say I want to execute that trade. Could you see that on the actual Thinkorswim platform? Like you showed the actual orders out there, the option calls?
I could I don't have that trade was one that we just modeled. I'd have to pull one up and I didn't get it ready, Fausto. I apologize.
That's
I
okay.
should.
Is there anything good right now? Because I'm in a buy mode right now.
You're in a buy mode. And this works for any of those candidates that you might be looking at. Let's see. What's another one that we were just looking at the other day? Let me pull it up here.
Well, I mean in buy mode, I'm in a trade mode.
Yeah,
Yeah. 'Cause I could be in a
absolutely.
sell mode. I could be in a sell mode too.
Yeah. Um, I don't have a ticker off the top of my head. I apologize. I didn't come prepared.
That's all right. That's all right. That's all right. But anyway, the indicators that you're using specifically, these are the ones you're only really using because I know you had a bunch of indicators when you give everyone for free.
Yeah.
You're gonna try to
This
get them.
is this is one of the ones that we're using. This is called the confirming MACD, and what I like about it is that it's using the algorithms and the stuff that the Appel father and son team came up with, but at the same time I've kind of turbocharged it, meaning that I can use different types of prices to decide what feeds into those indicators. Like on the MACD, sometimes as an end of day trader, but somebody who's interested in volatility, I might be interested in, the high low close divided by 3, which gives me an idea of how wide that bar was rather than using just the close price. I'm actually a big fan of using volume weighted average price in my
VWAP.
calculation of the MAC. Yes,
Yeah, a lot of us use a VWAP. That's a pretty good indicator.
but then take that VWAP and use it as the seed in the MACD calculation, right?
Hmm.
And my little indicator allows you to use any of those choices in order to uh, get whatever kind of signal you're looking for. So I want to have a little bit of that VWAP flavoring whether or not I should get in there. In other words, I don't want a MACD signal just coming off of the closing price. I want to know that there's been some volume behind that. So I'll seed that calculation with the volume weighted average price and get these arrows instead. So I like that.
And we got that link too. Let's post that link and give it to everyone.
Sure.
And share it, everyone. There it is. There's that link right there. If everybody wants to kind of get that link right there,
In
and you
fact, I
could.
can show you if I pull that in front of my screen here. This is where you go. Right at the top, you got that download the free indicator suite. But I also, I'd love for you guys to just check us out. So you can check out our YouTube channel. We've got a similar show like Fausto's got. We've got some stuff on TikTok, all little tidbits. None of this is, none of I want you to experience what we're like if you're interested. If you want to delve into some options, we've got a free workshop that really goes through those covered calls and covered puts that you were just talking about, Fausto.
Good.
So just guys, just have fun. I just want you to have fun. So come on over to this links.tt4.me website and check out some of our stuff. That's all I can ask for.
All right, perfect, perfect. So AJ, just wrap up a little bit. Any last minute advice you can give these traders and tell them a little bit, like you could share with them?
Sure.
Any last minute advice that things and mistakes that they're making, things that prevent moving forward, what's going to happen, like how to prepare for an election and after the election, so on.
Yeah, the election, that's a whole can of worms in itself, isn't it?
Yeah.
I actually think at this point, folks are kind of disgruntled overall with politics. And, one thing you got to realize with the markets is that really we just want the rules. If you compare the markets to any sort of like sporting event, right?
Hmm.
Um, you notice that the best players in any sporting event, They know what the rules are. They know what offsides is. They know where the boundaries are, and they play like right up the edge of the, right to the point where they're almost out. And what you can't do is you can't be changing all of a sudden you're in and now you're out, not because you got out, because you've been teaching yourself how to play to the edge of the rules, right? It's because you keep changing the end field, right? You
Uh-huh.
keep changing the out of bounds. So what businesses want, what the market wants is stability. They don't want rules change. They don't that I mean that's why they honestly that's why they like gridlock in Washington, because then things don't change and they can just play to the rules, and the rules aren't going to constantly be changing. So I almost feel like Wall Street's just like, whether it's one or the other, it's not going to be good. And so they're just preparing one way or the other. And that's one of the things I'm seeing the S&P, and what I keep telling my folks with. I'm like, our signals are all over the place. We can't determine if we're uncertain. We can't determine if we're bullish. We can't determine if we're bearish. We're slowly making new highs, but we've been stalling ahead of the election. The
Right.
only thing that is certain is that we shouldn't be thinking more than about a month. A lot of times the strategies I talk about are like 5, 6 month strategies. But what we've been telling our program participants, Fausto, is, for the next month or so, think short term, think quick trades, think overnight trades. You don't want to be caught with your pants down here. So don't sacrifice, short term gains for a position that lasts long if we don't know what is going to be happening in the long term.
Yeah, you don't want to, and especially don't take things personal. Listen, you're talking about sports. I'm a Jet fan, and believe me, it didn't work out too well for me. They thought we were going to go to the Super Bowl, and and obviously they're probably one of the worst teams in the NFL, and they had like an all-star team. So just like anything else, there's a lot of stocks out there. There's opportunities to kind of track certain ones of them depending where the election goes. But don't take it personal. You'll blow up your account. That's where I always kind of look at it.
And I threw something up on the board really quick, up on my screen. Let me go through this with folks, because you asked this question. I want to go in a little bit more detail. I don't know if we can get my screen up there.
Uh,
Um,
is it this one?
yeah,
There you go.
listen, this is my 2 cents for folks. If you're delving into this investing thing and you really want to, see some success, take some of my shortcuts instead of doing the way I did, which was way too long, right? Number one, let's see if I can get this up here. Number one, you definitely want to watch out. And I'll tell you, I hire some of the best copywriters. I've got some really compelling marketing, and we all do in this education industry. But you really have to realize that they're going to, put their best foot forward in their presentations, in their web pages. But you want to stop chasing shiny objects, right? What I always tell my folks is settle on that one type of investing that works with you, and then just learn it well. You got to put on blinders tied towards all those shiny objects that people keep putting in front of your eyes. So that's rule number one. Find something that works for you and works for your lifestyle, and then just dig down deep and learn it well. Number two, I always say, hire a mentor, somebody who is currently doing what you want to do and knows how to teach, right? And you're going to be able to sit in some of their, go with somebody who's got a trial, who lets you, see how it works. Take a sample class, whatever it is, make sure you can learn from them, because it's called guided discovery, and it's way faster than doing it by trial and error, and
Hmm.
it's way cheaper. Join an investing group, right? That way, not only is an investment group good for camaraderie, right? You'll probably know these people for the rest of your lives. But the other thing is, and this is something I learned at HP. So at HP, when Canon or Epson would offer another printer, we were like the first ones in line at Best Buy to buy this thing, right? And
Hmm.
then we would take it, and our engineers would take it all apart, figure out what they did, and then incrementally improve one thing, and then send it out as the new HP printer, right?
Right.
It's called leveraging with pride. In grade school, they get kids in trouble for looking over each other's shoulders. But the truth is that's how we move forward in society, is we leverage with pride. We take what the last person did and we make it a little bit better and send it off to the next person. So join an investment group, and I'm going to actually condone, look over people's shoulders and let them look over your shoulder. And if they're doing something that you like, do it. And if there's something that maybe you would do differently, great, do it differently. Paper trade it if you're worried about doing it with real money, but get the experience and definitely leverage with pride. If you see, Jack over there doing a trade that looks really fantastic, really delicious, really sexy, do it. Maybe do it a little bit differently, right? With
Mhm.
options, that's what we always could do. Try a different option strategy combo, whatever. But definitely don't worry about leverage with pride. Try to shake off that stuff that they taught us in elementary school about not cheating. Definitely leverage with pride. And you can't do that if you're a lone ranger. Join an investment group so you can get some trade ideas. And last but not least, right? Surround yourself with like-minded investors, because you'll always have that voice. I had my mom's passed away, but man, she told me for the first, 5 years of me really pursuing this trading, that every time I had a loss, I was like, "Mom, I had a trade go backwards on me." "Oh,
Mm.
I knew it, especially with you getting into those options." She never knew what an option was. And, that voice, even now, I'll have a trade that didn't go as well as I wanted it to, and I'll hear my mom's voice. And what you wanna do is you wanna have people, number 1, if you have a trade that doesn't go your way, you want people that'll be around you and be like, that's all right, because we know the next one's going to be better, keeping your spirits up. And then you also want people to celebrate with, who will go, down to the pub and have a beer with you, or at least have one on FaceTime, right? So, make sure you surround yourself with like-minded investors. Nobody who's going to keep giving you that voice that's going to tell you to get out of the trade too early when you haven't actually gotten the full Monty of it.
AJ, every four things that you talk about that's on there, I'm glad you brought this up because I could, I say the same exact thing. I just like how, you word it and the way you
Yeah,
have in your PowerPoint because listen, that's why we've learned from each other. We basically trade the same way. I got my own, we have hundreds of traders in our trading room. You got to find a mentor first. It doesn't stop there. Like I train people and they're like, okay, you've taken a class with somebody. What happened after that? Who you trading with? Oh, I'm by myself. But how are you going to be able to run a business? You can't be the waiter, you can't be the chef, you can't
right.
be the maitre d. You got to surround yourself with a team. And you feed, you feed for with each other, people that are trading out there, and that's a huge thing. And you know what? You might have to move to a different group. Maybe listen, like some of the people that's not your style or whatever it is.
That's it.
But you definitely those are I would say the top four things, and I love those four things you post up there. I never seen it better than anyone that posts up there. I mean, I say it, but the way you have it written out is just absolutely perfect. And thanks for
Yeah.
sharing that. But that's probably, I would think, something very valuable everyone's got to take away from here. That if you want to trade with me or AJ or anyone that we bring on the podcast, those are the four things that you really need to find. But don't be going out there doing yourself. Don't think you could probably figure it out yourself. Taking a course with somebody online and not continuing what's going on here. That's just the first. That's number one. Number two, you still got number three, number four to fulfill.
Mhm.
All right, AJ, thanks for coming here. I really appreciate it.
Fausto,
Love
as
your stuff.
always, thank you, man.
Yeah, love you having on here. I've got to have you back again. Looking forward to it. And everyone, we'll have this recording up for everyone to listen to. Go back and review. We'll have a couple of shorts made up for you by the end of the day. Just make sure you subscribe to the channel, like us, and ring the bell. And we'll see you in the upcoming podcast that we have. AJ, enjoy the rest of your